In this video, we will look at how to manage a trade simply with Japanese candlesticks. So if you have sophisticated knowledge of Japanese candlesticks, it will help you manage a particular trade after you have taken it. So this is a daily time frame chart of the euro US dollar. Let's look at what is going on this chart. So I have drawn this blue line here, which is obvious resistance. That resistance gets confirmed by these two candles. What is this pattern? This pattern is a dark cloud cover. However, it's a variation of a dark cloud cover, not a ideal dark cloud cover, because for an ideal dark cloud cover, the opening of the second candle should be above the high of the prior green candle, and the dark cloud cover must also come after an uptrend, plus the close of the second candle should be below the midpoint of the real body of the prior green candle, and the high of the dark cloud cover becomes resistance. So those are the conditions for a dark cloud cover pattern. It's a pattern on which you can initiate a trade. You are allowed to initiate a trade. It's a very powerful bearish reversal pattern. Okay, so that's the dark cloud cover. So assuming that you take this trade, it's a variation of a dark cloud cover. So assuming you decide to go short, that's your entry point. We know that the high of the dark cloud cover becomes resistance. So we take this point, that's the stop loss. So this is a short position. Okay. And where is your target? This is the obvious support level, that's where the bulls are sitting. So that becomes your target. So if we look at the reward to risk ratio, that's the risk and that's the reward. So roughly 2:1 or 3:1 reward to risk you can expect on this trade if you just take the ratio of reward over risk. So that's how the trade is set up. So assuming you take that short position, how will you then manage the trade? Okay. And there is this technique which I want to discuss where you look at each and every candle after it closes. Now this is a daily time frame chart. So for the next day, when the next day's candle open, you are not allowed to do anything. Just wait till the close of the next candle and then take a decision. Okay. Well, you are allowed to do anything that you want in the market. However, as a professional candlesticks trader, you don't act till a candle closes, because the close of the candle conveys very important information. So let's try to manage this trade. Let's look at what happens next, candle by candle. Okay. So let's look at the next candle. Fantastic. This is like music to your ears. If you have taken a short position here, see, you got the entry there. The opening price was the same as the prior candle's closing price. So your order got filled in here, which is great. And then the candle closed sharply below. So this is a huge bearish momentum. So you are making money if you have taken a short position. Let's look at what happens on the next candle. So at that candle, you would not close the position, nor would you take a partial exit. Correct? Okay, next candle, you have some maybe profit booking. Okay, so that candle completes a pattern called as a bull harami. Not an ideal bull harami, because for an ideal bull harami, the small real body, the second small real body should be within the prior real body. In this case, as you can see, the opening price of this candle is equal to the closing price of the prior candle. This is because it's a forex market, it's a 24-hour market. Correct? So it completes a bull harami, which is a bullish reversal pattern. However, if you look at the trend, it's just been two candles, so there is no need to worry about this exiting this trade, because consolidation happens when you have a sharp move. You can expect some consolidation to happen before the market continues to continues its original direction. So I would not exit on that trade. I would become cautious, but I would not exit. I would wait for the next candle to see where this is going, because if the next candle closes above this close, then there is a reason to worry, right? Because that the close of that candle is confirming the bullish implication of the bull harami pattern, correct? So have patience, wait. Okay, the next candle closes below the close of the prior candle, which means the any bullish implication of this bullish bull harami has been negated. So which means the market is still bearish. The bears are still strong. Remember, each candle represents a battle between the bulls and the bears. And currently, who is winning the battle? The bears are winning the battles. When the bears are winning the battle and you are in a short position, don't do anything. Just watch the market. Next, as you can see, the bears are getting stronger and stronger because the closing prices, the closing price of this candle is below the closing price of the prior red candle. However, one thing to notice is that the size of the real body or the height of the real body is getting smaller, right? This candle is smaller than this candle is smaller than this. What does that tell you? It tells you that the bears are powerful, but their power is reducing. The momentum is reducing. They are losing steam. Okay. So now you have to become cautious about this trade because this trade is now approaching its target. Okay. Let's look at the next candle. Okay. So again, there is no need to close or partially exit the position because the subsequent closes of the candle is below the prior candle, and this is equal to or lesser in size than the prior red candle. So if you are in a short position, no need to exit here, just to become cautious because we are approaching the support level, the target level. Okay, another candle which is closing below the prior candle close. However, now you can see this kind of a shape developing, which is kind of a bullish shape. Plus, the look at the height of this real body, much smaller than the previous candles. What does that mean? It means that the bulls are coming back into the market. This is, by the way, is not an inverted hammer. Sorry, yeah, this is not an inverted hammer because it has a slightly longer lower shadow. I will discuss inverted hammer in some other video, but this is not an inverted hammer. There are many conditions that needs to be satisfied before you confirm uh, the occurrence of an inverted hammer. Anyways, the bulls are coming back into the market, so you have to become even more cautious. See, there are no patterns here, but you can clearly see the size of the real bodies. The height of the real bodies is reducing, and those are very important clues in the market. Keep in mind though that the bears are still strong. Look at these upper shadows, right? The bears are still strong, but the strength is reducing. Okay. Again, as you can see, the height of the real body keeps getting smaller and smaller and smaller, which means the bulls keep coming back into the market. On every candle, we are getting a clue that the bulls are coming back into the market. They can come back sharply on any candle now. Okay, now you have something which resembles a hammer. Why do I say resembles? Because strictly for a hammer, the height of the lower shadow must be at least twice the height of the real body. Now, in this case, if you zoom in and try to measure, I think it satisfies the condition for a hammer. But if you have to really go and zoom in and measure, then it is not a hammer. Okay, a hammer is something that should become obvious on the chart. Here, if you have to do measurements with a scale, then the probability of a reversal is very low on that candle, even though it satisfies the conditions for the hammer. So yeah, this is a bit subjective, but please pay attention to what I am discussing here. It's all about probabilities. Something might satisfy the conditions for a hammer, but the probability that a reversal will happen is very is very low. Okay, you need something like this. That's very obvious. Here you don't have to measure, plus it is confirming the prior support. So look for obvious hammers. Don't look for hammers where you have to actually go and measure it. Okay, if you have to measure it, then it means it is not a hammer. Okay, so now here you have to become cautious. Maybe you can lighten up or scale back. You can reduce the size of your position. You can partially exit your position. So your stop loss was here, right? It's time to move the stop loss somewhere here and try to take a partial exit. You don't want the price to go all the way back up and hit your stop loss. So your time to move the stop loss down in the direction of the trade. Time to take some partial profits, scale back, lighten up. Okay. Let's look at what happens on the next candle. Well, that's it. The bulls are back in the market. Finished. This is a bullish engulfing pattern, very, very powerful pattern. Plus, it is coming near the support area, although it is not strictly confirming the support area, but it is coming near the support area. This is the time to completely close the position. It's enough now. I mean, your entry point is here, your exit point is here. That much profit is enough. Take that profit and leave. Go to some other chart. Okay. Because if you don't do that, if you don't exit at the right time, this is what happens. Okay. So please understand that Japanese candlesticks not only help you in entry, they also help you in exits, they also help you in partial exits, and they also help you in management. So go to this link where I have created the Japanese candlesticks trading mastery program. It's a highly detailed training program. It has more than 1000 chart examples just like this. Students from more than 170 countries are already doing this program. So preview some of the videos here. Start with level 1. If you like level 1, then continue towards further levels. There are multiple levels. As of now, there are 15 levels in the program. You might find it interesting. It might help you improve your trading success rate. If you are already using some trading system, continue using that trading system because you have mastered it over a period of time. However, add to that this knowledge of candlesticks that might enhance your success rate because we are trying to put the odds in our favor, and Japanese candlesticks help us to do that. So that's the trade which I wanted to discuss. You can manage a trade candle by candle with Japanese candlesticks.